And Rabobank's Ian Lambritz is also here with us. Ayan, let me begin by asking you, you're servicing some of the big FII names in the UK and Europe. What is their perception really of India? How are they viewing Indian markets in volatile times like these?
Yeah, well, the thing is now, unfortunately, given the global scenario, to take a decoupled view in India is slightly difficult. So obviously, in the short term, I think the markets will be swayed by the global views, and I think everyone understands that particular fact. And so from a very short-term point of view, I don't think there is any specific trigger or any action they're looking for. Of course, if anything comes out in the budget or we have some announcements in this session of Parliament, but I think the hopes on that is pretty low. So it is completely on the global factors that the market is moving. But having said that, especially emerging market fund managers still believe that India is, among large markets, India is still the best market to invest in. And the benefit of doubt is still definitely on India delivering growth. Of course, the setbacks recently has been pretty strong, especially the sort of downward trend we saw in the last 2-3 weeks has been pretty strong. But I think people are mature enough, and especially the long-only investors based out of Europe and UK are looking at opportunities to get in. And I think the area where the interest is growing, and as we have seen in the interaction in our conference also, and probably with a lot of the conferences that are going on around the city, that people are looking a lot into some of the mid-cap ideas where they believe that, given the fall, where the companies are on reasonable valuations, probably on better quality managements, whether from a long-term point of view, if you can, as I said, ride the volatility that is in the short term, there can be good entries of opportunity.
Right. Yan, what will you be looking for in the Fed minutes from the January meeting to assess the state of the US economy right now? Investors are no longer pricing in another round of tightening in 2016 according to the Fed minutes, Fed futures indication. In fact, the data point coming out of the recent survey also indicates that a risk of US economy slipping into recession is something everybody is scared about, and hence raising cash levels. What are your assessment, and what are the indicators you would watch out for?
Yeah, the market has moved a bit, hasn't it? If you think back of December, the dot plot by the Fed members itself showing 4 rate hikes there, and the market at the time sort of at 2 and 3, and now has priced out completely. In the minutes, I'm looking for just one thing. Are they trying to keep the March hopes alive? The macro data has probably been good enough that they might just do that, but of course what's been going on outside the US in the financial markets would strongly seem to suggest at least for them to hold off till June.
Right. Ayan, what are your thoughts on flows? I mean, Indian markets have been at the receiving end from FIIs who've been selling out almost out of India now 15 to 16 months. Almost $10 to $12 billion have gone out already. How long could we see outflows continue as far as our own markets are concerned?
See, it's not probably right to say there's been just an outflow from India. The redemption pressure has been on funds which are, on global funds or on emerging market funds, mainly on the emerging market funds. So the redemptions there has been relentless. So in that sense, there's been a bit of a forced hand. And also you should understand a lot of outflow has been in the ETFs. So it's not only that the funds have been there, but when I interact with clients there in UK and Europe, people are telling me that some of the India-focused funds are actually seeing a lot of money coming in, and the redemption pressure in specific India-focused funds have been much lesser than emerging market funds. So in that way, India in an emerging market it's still, I would say, in a sweet spot.
Well, then, what is looking good, Ayan? Which are the sectors and themes that you've been recommending to your clients who believe that India is in a sweet spot, given that we've seen some of at least the good quality large cap companies correct quite sharply?
So obviously, I think the consensus sell, or rather the consensus opinion is that banks is something to be avoided, which is a bit of a, which I will not say surprising, but given, the comments that we have seen or what we have seen with the PSU sector. So any sectors that are highly leveraged is something that companies or the clients out of there are not really looking at. So obviously, we have seen a lot of offering in the IPO space that is happening. So people are looking in that also in interest. So sectors, of course, consumer sector is something that is always preferred, but given the valuations there, people are seeing that if there can be an opportunities there. IT, mid-cap IT is another space that looks interesting. And companies in niche segments like, for example, road building companies, select probably cement companies. There are sectors like that. So, but I would, as I said, that any highly levered sectors or sectors where the recovery cannot be seen in the next few days, like anything on the material space, is to be avoided.
Right. Jan, before we started this discussion, we were talking about some of the findings of the BofA ML Fund Managers Survey, and not surprisingly, cash levels right now are at the highest in many years. How are global fund managers positioning themselves right now, according to you? Would you agree that cash continues to be king?
I think if you look at their overall positioning, many would have loved to have been in cash, but it hurts to be in cash for a long time here. Cash too isn't compensated very well, and they must be nervous because the big story in equity markets is the liquidity that central banks, the wedge that they've driven between sort of returns in the stock market and returns in the bond market. That has to correct in three possible ways. Either stock markets keep falling down towards bond yields, or the recoveries for real bond yields start to rise, or central banks continue to extend and pretend. And as the hope of the latter rises, the risk is that if you're on the side, then you were there when it went down, you're not when it goes back up.
Ayon, what are your clients looking at as far as Indian markets are concerned in terms of drawing comparisons in the emerging market pack? I'm talking about allocators, asset allocators, who look at the region and then compare each market within the pack. Because a lot of strategists we speak to say that India may have fallen 20% from top, but still doesn't really appeal a whole lot compared to Korea, Taiwan, or even Indonesia.
And as I had said, yes. So when you're looking at the entire peer group, they basically see that if there is growth to happen, in a sustained growth over the next 5-6 years, at 7 to 8% GDP or even higher, I think India is the only market there. So, unfortunately, because of the global issues, the market has been beaten down. But some clients are there who look at it as a healthy correction. They don't really look at it as the market falling, but the market getting into a healthy zone where it can get into a place. Who look at it as a healthy correction. They don't really look at it as the market falling, but the market getting into a healthy zone where it can get into a place where the valuation is reasonable. India always has been a very expensive market compared to other EMs, but so obviously the optimist looks at it as a healthy correction, and this, all I can say, the story is not yet over, definitely among them, and among China or Brazil, Russia and other emerging markets. As I said, India definitely is in the sweet spot according to them. But having said that, I would also like to add that there is slight amount of impatience growing on the policy side also. Obviously, when we had the change in government, there was a huge amount of euphoria. But I think there's a growing amount of impatience among the FIIs to understand why is there not a huge push on the policy side. So I think there is where there is a bit of a frustration building up. But I'm still, as I'm saying, it's not that people have, and no one I think has given up on India, and it still is probably the best market to invest in the emerging market basket. But I think we will need a little bit of push from the government for some more triggers for to see a huge amount of fund inflows coming in.
Jan, the other thing which has been exciting equities across the globe last couple of days is commentary coming from central banks indicating that they are keeping their cash aside, even if there's further stimulus required to fuel the economy. And in fact, we have been witnessing good reaction also in the markets like BOJ, even European market, for example. What are your thoughts on that?
Yes, a very interesting interview on one of your competitor channels there recently, where someone was lamenting how central bank action, in this case the Bank of Japan's action, had led to doubts about financials, and that all leading to a push lower in equity markets in general. And then when asked for the solution, the person said without blinking, central banks need to do more, having just analyzed that central banks were very much at the root cause of this. I think they're at the cause of this. They shouldn't be doing anything for the moment. They should try and stand still. First, do no harm, remember. However, I think the reality is they're all under a lot of political pressure to keep moving, to be seen to be doing something. And therefore, from the ECB and Bank of Japan, more is to be expected. And perhaps that will result also in the Fed actually doing less, as in res, tightening in this case.
Ayon, the big event really for the markets now in the next couple of weeks is, but of course, the budget. As an FII, what are the expectations really as we count down to the important event?
I think the greatest expectation that is being built in is how much of the government is going to give a fiscal stimulus. Will there be a fiscal stimulus given in this particular budget? A lot of people think that if the government is thinking too much on the fiscal deficit side, especially on the spending side, if they are restricting the spending side, might be a very prudent decision on the part of the finance minister. So that is something that I think that will be the most widely looked at, is would there give any fiscal benefits. So apart from that, I really do not think, of course, any concrete news that we get on the GST, if that is published in the budget speech, I think that will be looked in positive way, because that has been one of the largest single frustration points for the FIIs, where they've not seen the passage of the GST still. And and as I said, and apart from that, I really do not see anything more. Maybe some incentives on taxes to FIIs, or at least to get away with it. On that side, I do not. I would think that. So it's mainly on the fiscal side, and I would think that the FIIs would be keen on looking at.
Right. Jan, let's talk about